Hey guys, ladies and gentlemen, good morning, afternoon, wherever you are. Today is Wednesday, July 6th, 2022. Hope everyone had a great Independence Day. I know there's a lot of turmoil going on in our country and our world, but I still think we should remember the history and still celebrate no matter what is going on. So, anyways, hope everyone had a great holiday weekend, enjoyed the day off. Hopefully, you had the day off. Hopefully, you have the day off and paid. That would be even better. But hope everyone's doing great. So, we're going to do our Market Pulse weekly update. Usually do it on every Monday, but since it was a holiday, we are getting into it today. So, first, we're going to do our national market update. And the good news is that pending home sales did rebound. And after we had 6 straight months of pending sales being down, we did log a just under a percentage point at 0.07% gain in May of 2022. This measure of contract signings, it's still down 13.6% year over year, and that is being blamed mostly on higher mortgage rates. Today, I just checked the numbers. The 30-year fixed national average 5.56% on a 30-year fixed mortgage. However, we were just able to lock somebody in at a 4.99 rate with our lending partner, Right Choice Lending, and Chuck Barone. Go check out his videos, and they were able to get 4.99% par rate with 20% down and good credit. So there is some opportunities out there, but let's go back to our national update. In stubbornly growing home prices, they finally slowed. The Case-Shiller National Home Price Index booked a smaller gain in April than it did in March, which has reversed 4 straight months of increased gains. Realtor.com is reporting that housing inventory improved again in June, up 18.7% over the last year. This is the largest increase in the data's history that they have been recording this data. And that has been driven by a combination of more sellers listing and moderating buyer demand. Okay, we know that the Federal Reserve has been raising interest rates lately in an effort to help cool inflation. And in the housing market, the average rate on a 30-year loan in May was 5.23%, which is up 2.96% from the same month last year. Mortgage finance giant Freddie Mac reported that. Now, across the United States, the pace of resales dropped for the 4th consecutive month in May, and it was expected to keep sliding. That was reported by the National Association of Realtors. And nationally, sales volume is dropping in response to affordability constraints, and more buyers will take a step to the sidelines in the coming months, and that was said by Nicole Bashad, economist with listing site Zillow, as she said in a recent statement. So I'm going to get into our local market update in Southern Nevada representing Clark County. The number of units sold year over year, 2,668 for June. That's down 24.7%. There is 4,674 new listings. That is up 21.1%. And the units available, 5,746. Up 134% year over year. We have a 2.2 month supply of inventory. 6% is considered an evens market, but however, I got to mute that. The phone's going off like crazy. An even market is 6 months of inventory. I actually think it's lower. 4.5 months would be an even market, but we are at 2.2 months of effective availability in our market for single family units. That's up 211% year over year, June 2021 to June 2022. And condos median price 280, that's up to 29.6% year over year. Median list price 290, and there's 1.8 months of effective available condo inventory in Southern Nevada. All right, and there was an article by the Las Vegas Review Journal that we had home sales median price has actually decreased for the first time in over 2 years to 480,000 is the median. In May, it was a record 482,000, but I'm going to go ahead and read this article for you guys. Southern Nevada house prices fell last month for the first time in more than 2 years as increased borrowing costs threw cold water on a once sizzling market. The median sales price was of previously owned single-family homes. The bulk of the market was $480,000 in June, down 0.4% or $2,000 from the record high set in May, as reported by our trade association, Las Vegas Realtors. Home values are still much higher than they were a year ago, as the median sales price last month was up 21.5% or $85,000 from June 2021. Now, we knew that 25% gains in appreciation were not sustainable. We should see something more normalized back to the 3, 4, 5% a year, but I do think we are due for some sort of correction. I don't know if it will be a crash, because a crash is when everything is selling, nobody's buying, prices have to keep dropping like a falling hot knife, and we are not seeing that yet. I do think we are in correction territory. So back to the article. Last month's dip was by no means a dramatic one, just $2,000, but it was the first time that Southern Nevada's median house price fell month to month since April 2020 amid the early chaos of the pandemic. Sales totals also dropped last month as buyers picked up 2,668 single-family homes, down 8.2% from May and 24.7% from June 2021. At the same time, the tally of available listings shot higher as 5,746 houses were on the market without offers at the end of June. That is up 61% from May and more than double from June of 2021, according to the association. The association reports data from its resale heavy listing service, which is the multiple listing service which we as real estate agents use for our data, for finding houses, for listing properties, and doing our research. Locally and nationally, home buyers have been pulling back lately as higher mortgage rates wipe out the cheap money that fueled America's unexpected housing boom after the pandemic hit. And there is some relief for potential home buyers. In recent months, Southern Nevada has seen fewer home sales, a rise share of price cuts, a growing inventory as increased borrowing costs make it all the more expensive to buy a place following a year of huge price gains and people pay more for gas and other goods. And as Las Vegas Realtor sees it, the housing shifts are offering some relief to prospective buyers following a prolonged hot streak marked by rapid sales. Buyers showing homes with offers, median sales price hitting all-time new highs practically every month. So the rising mortgage rates sparked a slowdown that was bound to happen at some point, and that was said by our association president, Brandon Roberts. Local home prices can't keep going up at the rate that they have been for the past few years. More stable prices, along with the increasing number of homes on the market and decreasing number of homes being sold, are providing some relief for potential buyers. And that is a quote from Las Vegas Realtor Association President Brandon Roberts. Southern Nevada prices fell in June after climbing almost nonstop for 2 years. I'm going to put that chart right down below for you guys so you can check that data, and that source is the Las Vegas Realtors. But as buyers pull back, this will help inventory recover and price grow slow from its peak, leading to a more balanced market, and in the long run providing more home ownership opportunities for those who are currently priced out today. Okay, so in Southern Nevada, the past 16 weeks, we have seen consistent growth of properties coming on the resale market. We have an increase of 11.67% available single-family homes from the previous week. We are seeing more homes expired. It's actually a 290% increase of homes expired versus the last week. We saw 1,286 price reductions out of 1,300 or so new listings, and those price decreases we have seen over 2,500 over the last 2 weeks. As of July 4th, 2020, there are 813 more active residential properties on the market compared to 1 week ago, which is an increase of 10.69%. Okay, so we are seeing a lot of things going on here in the market, a very fast shift. So I'm going to go into the review of the markets for last week, and they were down again. Stocks booked the worst first half of the year for the S&P since 1970, and another losing week driven by concerns about the economy, inflation, corporate earnings, and rate hikes. We had weaker than expected consumer confidence, another hike in PCE inflation, which is the Fed's favorite measure, a slower growing ISM manufacturing index, a Q1 GDP showing the economy contracting at a 1.6% annual rate. We also had the Fed of Atlanta report that they're seeing about a 2% negative GDP growth. We haven't received the official numbers, but the Fed in Atlanta is reporting Q2 negative growth. When you couple that with Q1 of negative growth, Quarter two is now negative growth. We are officially in a recession, so you will start hearing the news saying we are in a recession. They'll probably use some terminology like temporary. It'll reverse back in quarter three. We'll have positive growth in quarter three, but we are in a recession. Been saying it for a while. Chuck Barone's been saying it for a while. Greg Manarino's been saying it for a while. We are in a recession right now, and you will hear about this very soon on the mainstream media. But there was some hope that could be found in increased personal consumption, although inflation has consumers spending more and getting less. The good signs, initial jobless claims fell to 231,000, while continuing claims dropped to 1.328 million. A lot of that is also due to it expiring. You have a certain amount of time, X amount of weeks you can collect, and once that expires, you need to go back to work and log your hours to be able to collect unemployment again. So the week ended with the Dow down 1.38% to just north of 31,000 points. The S&P 500 was down 2.2% to 3,825, and the NASDAQ, the speculative sector, was down 4.1% to 11,128. Bonds gained strongly. The 30-year UMBS 4.5% up 0.96 to $100.25. The national average 30-year fixed mortgage rate retreated in Freddie Mac's primary mortgage market survey. And guys, keep in mind that mortgage rates can be extremely volatile, so check with your mortgage professional for up to the minute information, or just hashtag Ask Chuck. Okay, and they do say that mortgage rates are still near historical lows and well under historical averages. People say in the 80s, 70s, they bought a house at 15%, 10%, 12%. Well, that is definitely a higher percentage rate, but when you calculate the median price of a home then, like in 1982, and it was $49,000 and you're paying 12% versus paying 5% on $500,000, I will definitely take that 12% at a $50,000 priced home, okay? So when you hear that information, it's extremely misleading. So the forecast for this week, which is already well underway, usually we do this on Monday, but the forecast is that services slow, jobs gain, the Fed's going to release their minutes, the services sector should show slower expansion by the June ISM non-manufacturing index. The June jobs report is expected to deliver a modest gain in non-farm payrolls, with hourly earnings still trailing inflation by a lot. Inflation's going up, wages are not going up, something has to give. The FOMAC minutes from the Fed's June confab may give us some useful insights on rates in the economy. And as you know, earnings season starts next week. We should start to see how companies are holding up with the strong United States dollar. And the markets were also closed Monday, July 4th in observance of Independence Day. So I hope everyone had a safe and sane 4th of July. I'm going to end this off with the Federal Reserve Watch. The forecasting Federal Reserve policy changes in coming months. No one thinks the Fed will stop raising rates in the next three meetings, with the 0.75 of a point hike forecast for July. In the chart I put on my newsletter on the Substack, if you guys are not subscribed, you'll receive this weekly. It's at jordandove.substack.com. Enter your email. You will get this report every Monday, and the consensus of them raising rates for the next three FOMAC meetings on July 27th, September 21st, and November 2nd. They're projecting 0.75 of a rate hike per session, and the consensuses are all above 95% that this is going to happen, with all the economists saying it's going to happen, and it needs to happen, and quite frankly, it needs to happen higher. So anyways, that's the market pulse for the week of July 4th, 2022. Everyone be well. Go watch Chuck's video later. See you guys.